Sure. Hi, good evening, all of you. Today's class is on salaries. So we have been given 6 classes in this whole program, in this on salaries, and we will be covering a lot of aspects. But the ones for today's class will be the chargeability. Chargeability means under what section the income tax gives you the right to tax salaries, and on what should it be calculated, and when should it be paid. So what is salary, when is the what is the taxable event which will trigger taxation of salary, what is the meaning of salary, what will be the taxable base, when will the salary be taxed. Okay, these are the things which are covered by the chargeability section, which is section 15 of Income Tax Act 1961. It basically defines the taxable event for a particular head of income, and this is section 15 for salaries. Then there is another section where we have the key terms which are defined, that is section 17, and there is a section 16 which tells us some deductions that we can claim against the salary income to derive taxable salary. And today's class, we will cover some allowances and some terminal benefits, means some retirement benefits. That is, if you leave the employment at the time of retirement or superannuation, at that time, what benefits do you get, which are mostly one time. At least in one organization, you may get only once. So mostly one-time benefits. What are the laws governing taxability of those one-time lump sum benefits when you leave an organization? So for today, we will cover these aspects, and we will cover some more aspects in the other classes, in the future classes. Okay. Your focus should be, you have been given the study material, it's uploaded on the portal, and you will be given, we will solve some questions in the class, we will give you some homework to do at home. Your objective in today's class will be very focused in understanding the basics of taxability. What happens gradually, that we start getting so much into specific provisions, specific treatments of different items, that we forget the basics, that when is it taxable, whether it is taxable for that matter or not. So today's class will lay the foundation of your understanding of this entire chapter. And while you can always refer to the books to update yourself about the provisions or to help you remember the provisions, but these foundational aspects, it should be so clear in your head that you need not refer to the books to understand the same. Okay. The taxability thresholds, it is taxable up to so and so limit, it is exempt up to so and so limit, those things we forget. We can very much come back, learn and remember the thresholds or the criteria, and then go to exams. But the basics or the foundational aspects of whether at all something is salary, whether at all it is taxable in India, when is it taxable in India, those things should be so clear in your mind that you don't have to revise or even look at your book for those basic things. Okay, that's why today's class is very important. We need not hurry. We have got 6 classes to cover salaries, so we don't have to hurry to complete, but we should ensure that we have understood it clearly. Okay, so this presentation is going to be with you for your ready reference. It has almost everything about, the topics that we are going to cover, it has almost everything that your institute study material has. If you are fully versed with this material, you need not refer to the salaries module again of the institute, because it has essentially almost everything, of the material in a condensed form. Okay. So let us start. Be very focused. Keep making your notes. Please sit with a diary or a copy, whatever. Please keep making your notes as much as you write. Okay, well, though you can see everything on the presentation and you will get a copy of this also, but as much as you write, it will help you to remember things. Sums, definitely please write and solve, and even concepts, try to write as much as possible, and your self notes will be your biggest savior at the time of exams. Okay, so with that said, let's get started. Basics. Basics, when we talk about salaries, like we said, we are going to deal with chargeability, which is section 15. Like we said, chargeability lays down the taxable event. So here the law says salary is chargeable on due or receipt basis, whichever is earlier. So taxable event of a source of income can be accrual. You know, we are all coming from chartered accountancy background, so we know the concept of accrual or mercantile basis. That is when something becomes due. Okay, though due and accrue may also be technically different. The word used in the law here is due. So when something is due and when you receive something which is cash basis, they are different basis of accounting, right? We know that. So the same you need to apply here. This is very typical of salary. Okay, it is not there in all chargeability sections of different heads of income are typical and unique in their own ways. Salary is different in the sense that taxable event is placed at due or receipt, whichever is earlier. Okay, so where any salary, that means if due or receipt, whichever is earlier, if that be so, that means where any salary is assessed in the year of, if it is paid in advance, if any salary is paid in advance, then it should be taxable in that year only because it has been received. So once it has been received and you have offered it to tax, it will not again become taxable in the year when it becomes due. Similarly, if a salary has been paid as arrears, that means it was already due in earlier year and you're getting it now. That means must have been paid subject to tax in the earlier year when it became due. So again, it will not be taxed in the year of receipt. Okay, so when we say due or receipt, whichever is earlier, we mean there is only one taxable event. It cannot be twice. Okay, if one event has happened prior to the other, it is not going to be taxed again in the next year when the second event has happened. Is this very clear? Okay, you cannot pay tax twice on the same income. Okay, if you have paid tax because one event has happened, then you don't have to pay tax again when the next event happens. It's very clear, very simple. Okay, so this is very foundational, very, very basic. Please just remember it. And next is meaning of various terms, which is defined in section 17. So salary is also defined, and you will be very surprised to know that salary is defined in different ways for different purposes of different sections within the head salary. So salary for the purpose of one kind of salary component may mean X, and for the purpose of a different kind of salary component may mean Y. And how does it matter? Because when they lay down the exemption limits or the way of calculating the taxable value of a particular salary component, they refer to salary and they say that for this purpose, salary would mean this. So at different places of the law, especially under the head salary itself, you will find different definitions of salary. Okay, and ma'am, do we have to remember? Yes, we have to remember. We have no choice. I will try to make the remembering easy. For now, we will do the meaning of salary for each and every case as and when it comes. At the end of it, when we have done all the concepts, then I'll give you tabular summaries of, see, these are the different meanings of salaries in the context of so and so, right? So it will be helpful for you to summarize, and that you can refer, prior to your exams also. Okay. So do we have to remember? Yes, we have to remember. Will we get confused? Yes, very high chances of getting confused or getting mixed up. So that summary will help us later. Right now, you try to remember one thing at a time. Okay. All right. Next, deductions. So like we said that we calculate salary, and then the law gives us some deductions to claim against the head salary, and then we arrive at net salary. So what can be the deductions? There are three types of deductions: standard deduction, which is say a flat rebate, entertainment allowance, and professional tax. These three types of deductions you can take. When do you get it? How much do you get it? We will discuss in the subsequent slides. Ma'am, do we refer your PPT as for making notes? Yes, you can refer the PPT, you can refer the discussion. If you find something, when it is told to you, if it is in a more simpler form than in the way it is written, you can take that down also. Okay. So while the PPT will be with you always, so if you want to take down something that is being spoken, you can make note of that also. Although I'm assuring you, nothing that I'm saying will be beyond the PPT. You will not miss out anything. So whatever you refer to, please try to focus on the concepts and not on making notes and missing out something. Okay, don't be in that race. Okay, next. When we talk of basics, this is also something very basic that we have to talk of. Okay, just tell me if the screen is adequately visible to you all. Download it. It's already available in the app. Okay. Screen is adequately visible, in legible. You can understand what is being written. Okay. Okay, fine. Okay. All right. Now, understand something that we are going to be discussing. Okay, very carefully. Try to, because see, when we do taxation, one thing is, yes, that the government wants tax on different sources of income. But one thing is also understanding that what head of income is supposed to target what category of taxpayers. Okay. And while it's a separate matter that what happens to the other category of taxpayers which doesn't fall in this section, that may have been covered in some other section that we will deal with later. But whether what this is intended to cover, we should be clear about that. So here, the very foundation of taxability of salaries is employment. The salary, by, even in common parlance, salary comes from employment. So there must be an employer-employee relationship between two people. You can get income from another person in different capacities depending on how you have entered into a contract with that person. But what will be taxed as salary has to be an employment contract. And not just employment contract in words, that is titled as employment contract between A company and B, Mr. B. It should also be an employment contract in spirit. That is in terms of, in the essence of employment. Now, what is employment? What is employer-employee relationship? Okay, somebody is having a problem. Could you enlarge the screen? See, now is it okay? Acha, okay. Okay, if you face a problem, I am going to enlarge my screen like this. Now is it okay? When you want me to go to the right, I will do. For the time being, this much is enough. So can you see the screen now? Adequately clear? Okay, thank you. All right, so contract of service versus contract for service. Yeah, what I was saying is that employment is not technically defined in the Income Tax Act. That this is employment, this is going to be employer, this is going to be employee. Okay, they are not defined as such. But we refer to various case laws also who have from time to time, identified the basic conditions of employment, and through that lens they have checked whether this particular contract or arrangement is employment or not, right? So what were they seeing when they were seeing those facts? They were seeing whether it is a contract of service or a contract for service. Contract of service means that I have been given a contract to serve under, in either cases, there is a contract to perform services. Contract of service, there also you will perform service. Contract for service also you will perform service. So there is a very thin line that in contract of service, you are bound by the rules and regulations of the person who has given you the contract. It is almost a master-servant relationship. Okay, whatever the master says, however he wants you to do it, you have to do it. Okay. And what is contract for service? It is also a service relationship, but you are not bound by the terms, rules, regulations, holiday schedule, login time, logout time of the person who has given you the work. Okay. You are not bound by that. You are an independent professional working for the organization, but because you are not bound by the rules and regulations of the organization, you are technically not a servant of the master. Technically, there is no master-servant relationship. no employer-employee relationship. Okay, what is the thin line of difference? Courts have said contract in when you deal with contract of service, when it is an employment relationship, then your employer not only tells you what you should do. So Banshi, when you come in the morning at 9 a.m., you need to do A, B, to C. They also tell you how you should do it. So Vanshi, you should open an Excel file to do a Word file to do B, a PPT to do C, and then at the end of the day, please mail A, B, and C, right? If your organization tells you so much that this is what you need to do and this is how you need to do, then you understand, apart from other factors, that this is a kind of employer-employee relationship. They have a control on you. But in case they don't have a control on you, they only tell you, so once you need to do ABC. How you do is not none of our concern. We need it by the end of the day. How you do it, when you want to do it, is up to you. You give it to us by the end of the day. Then it may be, apart from other factors, it is kind of indicative that you are not bound by them or you are not being controlled by them and you have been given free liberty to do the work the way you want. Okay. That may not be employer-employee relationship. And remember, if after judging a contract, if you are clear that there is no such employer-employee relationship, then whatever income emanates from that will not be taxable as salary. It can be taxed as anything else depending on what the contract is, but not salaries. Because for salaries, the very basic non-negotiable requisite is contract of service. Somebody asked me to summarize in Hindi, but I have no issues with that. But we have some students from South also, some who do not speak Hindi and they do not understand Hindi also. Okay, so let's therefore let the medium of communication be English. If you have any specific query, any specific point you need me to repeat in Hindi, I can do that. That's not a problem. Okay. All right. So let's do some examples. This was what I'm trying to tell you. For your notes, you can write, beside contract of service, you can write control. Who controls whom? Employer controls employee. So employer controls employee. And in for contract for service, you can say no control. The employer does not control employee. We should not call him employer, but the point is that the person will not be controlling. So we should not say employer, but the person will have no control, and therefore it will not be employer-employee relationship. Okay, so let's do some examples. Sujata is employed in Chopra Films. Sujata acts in various films and earns a remuneration for acting in the films. That is paid by producers to Chopra Films. So Sujata is working for Chopra Films. What is her work? She has to act in films. Okay. Who gives her money? Chopra Films gives her money. And whatever she acts in, who gets the money for the movies? It is the Chopra Films who get the money from the producers. So what is this kind of contract? This is a contract of employment. Because Sujata is not concerned with how Chopra Films is using the film proceeds. Yes, what they are doing. Her only work is she has been asked to come act. That's it. So she has to come act as per rules and regulations of Chopra Films. If Chopra Films has a holiday on Sunday, then she gets it. If Chopra Films has a holiday on Friday, then she gets that. She will have to work on Sunday. So she's bound by the terms and rules and regulations of Chopra Films. You will see all these factors to understand that this is employment. Okay. And if suppose Sujata in the other case, if she acts in film, she's an actor. In either case, she's doing the same thing. But she gets fees directly from the producers. She's not getting any fixed salary. She gets fees from producers depending on the films she has made as and when the films are made. Then is it employment? No. If there is no fixed routine obligation to pay, and if you're getting fees directly from producers as and when the work is done, and it's not fixed, it is depending on how big the movie is and what producers decide to give you, then in that way, producer is not controlling you. You are free to also work for other producers for that matter, right? But in the earlier case, if Sujata is employed with Chopra Films, most likely she may not be able to work with Johar Films for that matter. Okay, there may be a condition in the employment contract that if you are working with us, you cannot work with somebody else at the same time, right? So then she's bound by those rules. But in the case of the second example, she's not bound by any rules of any producer. Then this is not employment. This is income from profession of acting that she is in. Okay, is it clear? Let's do another example. So there must be employer-employee. Absolutely. The fundamental is there must be employer-employee relationship. Whether something is an employer-employee relationship or not, for that we are doing some examples so that you are clear in your mind. Okay. All right. Commission received by director or employee of a company. So there are companies, there are directors on the board of directors of companies. You know that, right? Now they can be employed with the company, or they can come just as, just for sitting fees, and they may earn only sitting fees from the company, right? But if they are employed with the company, they have an employment contract with the company, then whatever they get will be taxable as salaries because there's an employment relationship. And if there is a director, say an independent director, who is not an employee, who is not on the payroll of the company, who just comes to attend board meetings and gets sitting fees, okay, then that person is not an employee. It's not governed by the rules of the company. And he may be governed by a code of conduct which will apply to professionals working with the company, but that cannot be called employment contract. And in that case, for such director, he is going to pay tax on income from business or income from other sources, as the case may be. You need to see the facts of that case. But it is clearly not salary income. Okay. Next example. Salary by whatever name called to partner. Salary to partner of a firm. Okay, please understand, in partnership, partners, if they get salary or they get commission, this, that, by whatever name called, if they derive some remuneration, then it is actually an appropriation of profits and not a charge against profits. We are all account students. We understand the difference between charge and appropriation. Charge is an expense debited to the PL account, and appropriation is a distribution of profits after charging all expenses. Yes? In partnership, when you pay salary to a partner, it is actually an appropriation of profits of the firm, business profits. So if business profits are divided, not charged to PL, but divided among partners, it's actually what? It's actually business profit only in the hands of the partners. So salary received by partner always is chargeable to profits and gains from business or profession. This you may get confused. So try to remember it. And this is very relevant to you also, because it may be a PGBP sum and you may just solve it like salaries, and it's going to be completely wrong for you if you do not understand this fundamental that salary derived from a partnership firm by a partner cannot be salaries. It is rather profit from gains or profits and gains from business or profession. Okay. Why is it so? Because I explained it's not a charge against profits, it's an appropriation of profits. The relationship between a firm and a partner is not master-servant. It's not employer-employee. Okay. Remuneration received by MP or MLA. This MPs, MLAs, members of parliament, members of legislative assembly. Okay. What do they get? They also get something for holding those positions. But they are not technically government employees. They are not employed with a PSU. Okay. So they are not government employees. Therefore, what they earn is also income from other sources. It is not income from salaries. Okay. Next, exclusivity required. What do I mean by exclusivity? That means, can you have more than one employer at a time? You can. If your employment contract allows you to be employed with multiple people, then you can. Okay, but if your employment contract has a condition that if you work with me, you cannot work with somebody else, then you can't, because that would be a violation of the contract. But if there is no such condition and you can work with multiple employers, suppose you have two part-time jobs, you do 1 to 5 p.m. you work with somebody, and then 5 to 8 p.m. you work with somebody else, and your employment contract mentions that the same, and therefore there is no restriction perhaps in the contract to help you to do that. Then fine. If it is legally allowed, then even income tax has no problem with it. You may have more than one employer. It may also happen that you, during the same financial year, for 6 months you were employed with company X, for another 6 months you were employed with company Y. That is also possible. So if you see from the lens of income tax, one financial year, more than one employer. Is it possible? Yes, it is possible. You aggregate the salary received from both when you are charging it to tax. Aggregate it. Okay, A plus B. You change job every month, then you need to add 12 times. You need to take 12 salary from 12 employers and add but pay tax. Okay, all right. So that is how it is. Then the next question: salary foregone after accrual means tax relief. What do I mean by that? For this, you can write in simpler words. It's also given in the bracket that suppose salary of 100 rupees accrues to me. I tell my employer that out of 100 rupees, you don't pay me 100. You, every month, 20 rupees you deduct and you pay to your children education fund, which the company has created. I want to donate to that fund. So you will give to me, I will give to the fund. Better you only deduct from my payroll. You give me 80 after taxes, after deduction of taxes. Okay, you give me 80 only. You don't give me 100. Now, suppose this is the instruction, but you tell me if you remember the concepts, or if you've studied the concepts of application of income, diversion of income by overriding title. I don't know if you have studied the concepts, but you just tell me whether in this case my salary should be 100, which I am supposed to get, or 80 because I have voluntarily donated 20. Somebody saying 80, 80, 80. Somebody saying 100. 100. 80, 80, 100 mixed. Okay. See, 100 is my salary. 100 is the right answer. I have told my employer that you deduct a part of it and you pay to somebody else, and then you give me the rest. Only for administrative convenience, that you will give me, then I will give to this person. What is the point? You deduct now, you pay, and then you give me the rest. For that matter, employer will deduct 10 rupees of TDS also. So will you say that my salary income is 90? If out of a salary of 100, employer deducts 10 rupees TDS, then does the salary income become 90? Is the cash in hand only the salary? No, 100, right? That similarly, because these are things which the employer is paying on your behalf or on your instruction or on the instruction of the government to deposit tax at source. Okay, but they are your income. It is your income. 100 rupees accrued to you under the salary contract. You said 20 rupees, please donate. So therefore, he is donating. But 100 is your actual income. Okay. Therefore, what they are trying to say is, if I have foregone my salary, if I have said, no, I don't want 100, you only give me 80, 20 every month, you deduct it from me and you give it to, you donate it somewhere. So it is not that I never received it, that means it is never taxed. It has been applied on your instruction. Application of income is not deductible. Okay, it is as good as you spending 20 rupees on your personal expenditure. As good. You may get a tax benefit of that donation under Chapter 6A, that's a separate point altogether. But for the purpose of calculating taxable salary, any application of income will not be reduced. Okay. Generally, application of income is not a deductible expenditure, generally, because it is applied. It is not diversion by overriding title. Okay. It came to you, it accrued to you in the first place, but you decided to forego it or direct it somewhere else. Okay. It is like we give standing instruction to bank that every month you pay my credit card bill. Okay. Doesn't mean that that is not your money. It is your money, and you've just given an instruction to the bank to pay credit card bill out of that money. Similarly, this whole salary is your money. You have only given an instruction to your employer to donate part of it. Okay. All right. Now, next. Except surrender of salary in public interest to central government under section 2 of some act, that is exempt. Okay, that except that. That means in certain cases, this kind of application of income may also be exempt, may be reduced from your taxable salary. That is a very, very specific case. Okay, you may just, I mean, for the sake of covering everything I have mentioned, it's not very relevant for you. Okay, that if you surrender the salary in public interest to the central government under section 2 of a specific act, which is the voluntary surrender of salary, taxable income, exemption from taxation act 1961. So if you surrender your salary in public interest to central government under section 2 of a specific act, okay, then that is specifically exempted. Okay, the general rule is if you apply your salary, forgo your salary, it is still going to be taxable. But only that kind of surrender is specifically exempted and therefore that will not be taxed. So if the 20 rupees had gone to public interest and to the central government under section 2 of this act, then it may have been exempted. Otherwise, 100 rupees would have been taxable. Okay, this is such a rare case that it's okay. I have covered it. You need not. It's not. Don't bother. Not very important. Okay. All right. Next point. Gross up. Gross up means what? So you all know that there is a concept of tax deduction at source on lot of payments that we receive under the income tax, right? So salary is also such a payment that is subject to TDS. That means your employer will deduct the tax on salary and then pay the balance to you. You will never get to see that money, which is the tax. They will deduct and deposit, and you only get to claim it in your return of income. So that is TDS on salary. Now, what if the arrangement with your employer is such that you have said that, see, my employment contract is 100 rupees. I want 100 rupees. If there is any tax, you take care of it. I don't mind. I don't care. You don't deduct from my 100 rupees. If you have that kind of an arrangement with your employer, then that means that the TDS is being borne by the employer. That means, suppose he is going to gross up. Suppose the tax rate is 20%. Okay. And the tax would have been 20 rupees on 100. But because you said that I don't care, you only do what you want to. I want to get 100. That means you should, the law wants you to calculate tax in a way that you receive 100 even after deduction of tax at the rate of 20%. How do you even calculate that? If the tax rate is 20% and you want to receive 100 even after deduction of tax of 20%, such that you are not affected by the tax, then how does it even happen? It happens like this. The tax will be 20 divided by 100 minus 20 into 100. 100 is the salary year. 20 is the TDS percentage. And why you do 100 minus 20 base? So that when you calculate this, if you calculate, it will come to 25. Okay. And this you will add to the salary. This is supposed to be the tax now. The TDS will now be 25 that the employer will give. And your originally agreed salary was 100. So actually the salary in your hands for the purpose of taxation has become 125, on which when you deduct 20% tax, which is going to be 25, on which when you deduct 20% tax, you should get 100 in your hands. Okay, so that is gross up. What I mean to say, even if you have not understood the example, I mean to say that the salary that you receive in your hand, that is 100, because you said that I don't care about TDS, I want 100. That plus whatever tax the employer has deposited, that together is your gross salary. Okay, that together is your gross salary. Now, is there any exemption? Yes. If tax on non-monetary perquisites are borne by the employer. What is non-monetary perquisite? So salary can be given in different ways. It can be most common ways cash. Ma'am, foregone salary is taxable. Yes, yes. Except if surrendered under that specific act in public interest. So unless you do such a noble act which they have specifically exempted, okay, any application of salary or foregone salary is taxable. If employee contribution on PF also paid by employer is added, employee contribution on PF, what if it is paid by employer? We will do all this when we do PF. Okay, if I answer those things now, the other people who don't know PF will get confused. Okay, when PF comes, the time when we discuss PF, we will deal with that also. Right now, what we are saying, if TDS has been borne by the employer, then the taxable salary actually will be salary received, that is 100, plus taxes paid by the employer, that is whatever it is in this case, and total will be a gross taxable salary. Okay, and if out of that salary, if you have some non-monetary perquisites also, so you have suppose out of a CTC, what is CTC? Anybody knows CTC? Article students get stipend, they don't get CTC, cost to company. So CTC is a loose word to say that what is the cost to the company when they employ one person. Okay, so where they don't only consider the cash component that they actually pay to you, they consider everything that they incur on your behalf or on your account, right? Just because of hiring you. Okay, so they give you some cash salary, and suppose they also give you some perk with non-monetary perquisites. They allow you to stay in an accommodation which they have given to you. So that's a non-monetary benefit they have given you. They have given you an accommodation that you go and stay in this place till you are working with me, and thereafter, whenever your employment contract ceases, you need to go and stay in your own house. Okay, so that accommodation or that kind of or any other non-monetary benefit that they have given you, that's called perquisite. So if they paid tax on that non-monetary perquisite, if they bear it, if the employer bears instead of deducting from you, then that is specifically exempt under a specific section. Okay, but other than that, generally, if tax is owed by the employer, then that is also added to salary, and gross amount is taxed as salary. Okay. So, have we been able to understand the employer-employee relationship, the application of salary, and the grossing up of salary? Okay. These are laying the foundations of whether at all something is taxable as salary or not. Okay. Clear. Very good. Next, we come to accrual. Why is it important? Why is it important to study accrual of salary? If anybody will say. Why is it relevant to check whether salary is accrued or not? To know taxability. Why? Why or how to know taxability? How does accrual matter? For accounting? To find whichever is earlier. Very good, Smriti. We just studied in the last slide that to determine the timing of taxability. Okay. In the last slide, last slide, we studied chargeability also means to check not only the taxable event, when will it be taxable? And we studied it is taxable on due or receipt, whichever is earlier. So here it is actually a case of due. What is due? When is it due? For that reason, we are studying accrual. Receipt is comparatively easy. When you get it in your bank, you've received it. Comparatively easy. But accrual is something for which lawmakers had to lay down some rules that this is when accrual will happen. Yes, Swati. Swati was raising her hand. If you are not allowed to unmute, then you can put your questions in the chat box of Zoom or in the BOS portal. I am not asked. I think you can put down your question. I don't think you are being allowed to be unmuted. You can put it in the BOS portal also. All the questions at the BOS portal will be checked at the end of the class. Okay, don't worry about that. All right. Okay, let's proceed. So accrual we were studying. Why is it important? Because we need to see due or receipt, whichever is earlier. So we need to see what is due. When is it due? Okay. So salary accrues where services are rendered. For salary, it is very easy because salary accrual same meaning as accounting. There are specific rules of understanding accrual. Okay. So for accounting, don't mix that up. Accounting, you record it when it accrues. Okay, so your accounting is linked to that, but here it is about taxing it when it accrues, and whether it is accrued or not, there are specific rules. So don't mix it with accounting. Moreover, what accounting do you do in the hands of a salaried individual? Do you prepare as per accounting standards? So don't get unnecessarily confused. Achha. Because here when we say accrual, it is in the hands of the salaried individual, not in the hands of the company which is paying. Okay, it's not about when they are debiting to their PL. It is about when you will offer it to tax. Okay, the person receiving it. All right. Okay. So salary accrues where services are rendered irrespective of where salary is paid. So you may have performed a service in some country. You were sent to some place. Your employer sent you to some place, and you have performed your services and you have been paid salary in some place. But salary accrues where the services are rendered. In employment, it is easy because it's an individual who is providing services of employment. So the place, the physical location of the individual denotes where the service has been performed. So place of performance is easy to identify because it depends on the physical location of the person who is providing the service. Okay. So basically wherever the individual is performing the service, that is the place that salary accrues at that place where services are performed, irrespective of where service is paid. Because whether salary has even accrued in India or not is relevant for you to tax it in India. If it has accrued outside India, and we have spoken about the residential status, the residential status, that not all income outside India can be taxed in the hands of some say non-resident individuals. Okay, so we need to also know whether salary has place of accrual of salary, whether it is India or not, because depending on the residential status of the person, something which is accrued outside India may not even be taxed in India. Employer is sent to some other country, so salary for that country, salary for that particular service will not be taxable. That's what we are discussing. Okay. So in this example, if suppose pension or leave salary has been paid abroad in lieu of services rendered in India. So you were employed with India while you were until your retirement age, you were working with an Indian company in India. Then after retirement, you went and settled abroad. But your retirement benefits, pension, leave, salary, whatever you are getting after you have went outside. So you are receiving those outside India. But the services you performed before your retirement in India, then whether this is taxable in India, one may say that money is received outside India, but whether it has accrued in India, so the answer is yes, because services were performed in India. This is how crucial it is, the place of performance of services. Okay. Beside this slide, you can write, in your notes, you can write, beside accrual, place of performance of service will determine taxability. Okay. Next example, salaries payable by government to Indian citizen for services rendered outside India. So government has sent some Indian citizen to go and perform service outside India. Suppose they have sent you on to an embassy. Embassy has special exemptions also. Let's not take that example. Any government is paying salary to Indian citizen for services performed outside India. You have been sent outside India on work duty. Okay, but the salary is paid in India. Whether it is deemed to accrue or arise in India, in this case, normally you would have said that, ma'am, place of performance is outside India. But in this case, they have said this will be deemed to accrue or arise in India. This will be deemed. When there is a deeming fiction, logic is secondary. Logic has no role to play when law places a deeming fiction. Okay, if they have deemed that in this case, even if services have been performed outside India, it is going to be taxable in India, then you have to abide by that. Okay. Except there is an exception to allowances or perquisites paid outside India by government to Indian citizen for services outside India. Okay, that is exempt under both regimes. So there is an optional regime, there is a default regime, you know about it, and the taxability is different in different regimes. So just to say broadly before we get into details, that this kind of allowance which is paid outside India by the government to Indian citizen for services rendered outside India. So you understand that if you send somebody outside India, you need to pay him or her, say, a daily allowance to sustain life outside India. So that allowance paid for services rendered outside India will not be taxable in India in this specific case. Okay. Next, foreign nationals are entitled to following exemptions. So, in what happens to foreign nationals? The foreigners, non-Indian citizens. Okay, what happens to them? So, see, if they are officials of embassies of foreign states. So, there is an embassy of Russia. Okay, and somebody Russian is coming and working in India, sitting in the Russian embassy in India. Okay, so what happens? So they are actually performing work in India because they are being sent by the government of their country to the embassy in our country. Okay, and they are representing Russia when they are in our country. So what happens to their salary? So that is exempt because the nature of their work requires them to go and perform work outside their country, and that's why they have come here. Okay, so law has said, okay, in this specific case, we will exempt it. Even if they are providing service in India, their salary is exempt, provided they are not engaged in any other business or employment in India, and also provided that corresponding exemption is given to Indian nationals in such countries. So they said that government said, okay, I will not collect any tax on the salary of a Russian individual stationed in the Russian embassy in India, provided he doesn't have any other employment or business in India, and even Russia gives exemption of tax to Indians working in Indian embassy at Russia. Okay, so it's a quid pro quo. You give my people exemption, I give your people exemption. So this may vary case to case, country to country, depending on how the two governments have agreed. Okay. Is it very important? Not for exams, but for conclusivity, I have to teach everything. Okay. Next, remuneration to foreign national employee or foreign enterprise for service rendered in India. So if it's a foreign employee or foreign enterprise and services have been rendered in India, then it is specifically exempt if the employer has no business in India, employee is coming for very few days. So some person actually belongs to US, okay, and he has just come here for very few days. He has been sent here on a project and he is working here. The US company has no business in India. They may have just a customer in India and they had to send that person to attend to that customer. But they don't have any office, they don't have any business otherwise in India. Okay. And this employee who has come on this project, he has come for very less days, less than 90 days in a year. Okay. And employer, even if it pays tax in India, suppose it has some Indian sources of income and it pays tax, it does not claim deduction of salary paid to this individual while calculating its own taxable income in India. Okay. So basically, employer has not taken deduction of his salary income and he has come for very less days and employer has no business in India. So these lawmakers, typically or commonly call it as short stay exemption. Short stay exemption. That a person has come for so few number of days on a project that there is no point to apportion the salary for those number of days and ask him to pay tax here. Moreover, the employer is not claiming reduction of his salary. So the government overall has nothing to lose. Otherwise, what happens? If company X pays salary to Mr. A, then Mr. A pays tax on his salary and company claims deduction of salary charged to its PL normally. In this case, that will not happen. The condition is that employer is not claiming deduction of that salary. So in this case, they have specifically exempted the salary from taxation. Okay. Next, salary received by foreign national for services with respect to employment on foreign ship. So suppose there is a foreign national, his work is, in the relating to shipping business or in the navy or whatever, and so by virtue of that, he has just stayed in Indian waters because India has been defined, and India covers, some waters up to some nautical miles. So suppose he has been in those Indian waters for up to 90 days in a previous year, but he has been there and he was technically on duty. So if I technically see, he has been working in India for those many days. Okay, so normally it should have accrued. But they have said that no, this specific case is very typical. Their job requires them to stay in Indian waters. And if it is for so less number of days, less than 90 number of days, then let's not tax it. So they have specifically exempted it. Okay. And what happens to remuneration received by foreign government employees during their stay in India? So foreign government employees, if they come to India for some specific training in some specific Indian government establishments, foreign government employees, okay, are coming to India for trainings, specific trainings in specific Indian government establishments. Okay, then they don't have to pay tax. That is not taxable. That may be in a treaty relationship or in a, as a governments have agreed that let's do this exchange program, whatever it is. So this is a very specific case, and to promote the governments, to promote mutual exchange of information and exchange of people and exchange programs, etc. They perhaps even the other government would have waived any taxation on the Indian government employees going over there. Okay, so they have specifically waived these specific cases that normally a place of performance in India would have invited taxation, but in these specific cases, even if you were in India and performing services here, your salary will not be taxable. So these are exemptions, not very popular in exams, but if you have understood the concept of why they have been specifically exempted, they're very typical cases. So you would be able to appreciate. What is a treaty relationship? Treaty relationship is two governments, two countries having a mutual understanding, memorandum, a treaty, peace treaty. You must have heard, no? So if two countries two governments are agreeing and say that you do this, we will not tax you. We send our people, you don't tax them, something like that. So to foster mutual trade, to foster better relationship amongst the countries, they give these kind of exemptions for foreign nationals. Okay, that is the idea behind it. Even if you remember this overall logic, I think that's enough. You need not remember each and every point. Okay. This is just a recap of what we have been doing. Just see if there is anything that you have not already heard from me. I hope it is adequately clear, visible. Due or receipt basis, whichever is earlier. If once it has been taxed, it cannot be taxed again. What happens if the rate of tax changes between the 2 years? There is a specific section 89 which cures that. We will deal with it separately. Even if I try to explain it now, you will not understand. So that is an altogether separate mechanism provided in the law, that given that there are two taxable events and they are far apart and the rate of tax has changed between them, between the year of approval and the year of payment, then how to neutralize or compensate the assessee who has no fault and just the tax rate suppose has increased. So that section 89 takes care of. We will do it. We will do it, but in our subsequent classes. Arrear salary already taxed, cannot be taxed twice. Advance against salary is different from advance salary. Okay, advance against salary is like a loan. Loan is not income, therefore it is cannot be salary. Okay, advance against salary is a loan, and loan is not income. Okay. What happens if there is a retrospective revision of salary? This generally happens in government employees because a pay commission sits, periodically, say once in a few years, and they give a recommendation that with retrospective effect from so and so date, all the pay scales of these government employees, the different ranks will be revised from this to this. Okay, so if they are retrospectively revising salary, then what to do? Service has been performed earlier. So accrual has happened earlier, but now they have revised the salary retrospectively. In this case, you have to understand that the incremental salary, generally if it is revised, it is upward revision only, considering inflation. So the incremental extra salary, additional salary has technically accrued in current year only. It was not accrued in the earlier year because they didn't have any clue of them getting it. They have retrospectively revised it, so now we get to know that okay, they are eligible for a previous year also on that higher income, but otherwise they were happy with what they had got. So technically this upward revision, this extra salary is accrued in this year only and also received in this year only, and it will be taxed in this year. You cannot go back and tax something. On some specific request, I'll just repeat this point in Hindi. So, अगर एक गवर्नमेंट के केस में जनरली इट हैपेंस कि वो लोग पे कमीशन बैठाते हैं कुछ सालों में और बोलते हैं कि आपके 2 साल पहले से आप सारे गवर्नमेंट एम्प्लॉइज की सैलरी एक्स नहीं वाई होनी चाहिए, पर हमने एक्स दे दिया उनको ऑलरेडी लास्ट 2 सालों में. अब हम y माइनस एक्स इस साल में उनको देंगे टू कॉम्पेंसेट फॉर द लास्ट ईयर्स. ठीक है, तो ये y माइनस एक्स टेक्निकली इज किसके लिए है? उस सर्विस के लिए है जो पुराने सालों में दे दिया गया था. तो टेक्निकली तो कोई बोलेगा कि वो अक्रू पहले ही हो गया था, उसका टैक्सेशन तो पहले होना चाहिए था, बट उस समय तो किसी को पता नहीं था ना कि ऐसा कुछ अमेंडमेंट आएगा. ऐसा कुछ रेट्रोस्पेक्टिव मतलब आज हमने बोला कि पुराने दिन से ये लागू है, पर हम हाउ कैन वी गो बैक इन टाइम? हम पहले जाके कैसे कुछ चेंज करें? हम अगर पुराने दिन से भी कुछ लागू करना चाहते हैं तो वो इंक्रीमेंटल चेंज आज ही करना होगा. इसलिए ऐसे रेट्रोस्पेक्टिव रिविजन को आज ही टैक्स किया जाएगा. हम लोग पीछे जाके 2 साल पहले टैक्स नहीं कर सकते. ओके, आई होप दैट इज क्लियर, crystal clear. Wow. Meaning of salary. Okay. You may be wondering that oh my god, it is 1 hour now and we are only hovering around chargeability. But trust me, वो ही सब स्लाइड्स हैं जो लोग वापस कभी नहीं देखते हैं. बाकी आने वाले सारे स्लाइड्स आप कभी ना कभी वापस रिवाइज करेंगे एग्जाम के पहले. बट इससे पहले जो भी डिस्कस हुआ, अगर आप नहीं भी देखें बिफोर एग्जाम्स, बट इट इज क्लियर इन योर माइंड, इफ कॉन्सेप्ट इज क्लियर इन योर माइंड, then you're good to go, because they will not be directly asked to you. There will be concepts that you'll have to apply. Okay, somebody asked something. Then ma'am, relief वाला point क्या था? Section 89 relief वाला जो point था वो हम लोग बाद में पढ़ेंगे. वो इसलिए था क्योंकि आपका सैलरी रेट्रोस्पेक्टिव बढ़ा नहीं है, टैक्स रेट फ्यूचर में जाके चेंज हो गया है, और आपका टैक्सेबल इवेंट ऐसा रहा कि आपने काम 1 साल में किया है और पेमेंट 1 साल में मिला है, और उस बीच में टैक्स रेट ही चेंज हो गया. सो व्हाई शुड द एम्प्लॉय सफर? उसके हिसाब से देयर इज अ स्पेसिफिक रिलीफ सेक्शन 89 that does not involve retrospective change in salary. It involves prospective change in tax rate. Okay, चलो ठीक है. मीनिंग ऑफ सैलरी. अच्छा, यहाँ पे है हमारे पास सैलरी में सेक्शन 17(1), परक्विजिट डिफाइंड इन 17(2) एंड प्रॉफिट्स इन व्यू ऑफ सैलरी 17(3). तो सेक्शन 17 के 3 सब सेक्शंस में ये तीनों बातें डिफाइंड है, पर ये सब कुछ सैलरी के ही परव्यू में आती है. by whatever name called, all three items are taxed as salary. There may be different tax treatments prescribed in the law for different components, but they are all covered in the ambit of taxation. They are all salary for our purpose. Okay. Salary has been defined inclusively. Are you noting the word inclusive? We are law students also now. Anybody knows the difference between means and includes? Anybody knows the difference between means and includes? Yes. So you have to just briefly type, you will not be able to unmute. Correct. Perfect. So my students already know things. Inclusive is not exhaustive. Means जो list उन्होंने दिया है, the list that they have given is not a concrete list. There can be more things. And generally they define things like that only. Because they are not sure. They don't want to leave anything out. So if they give a meaning definition, salary means X plus Y, then how will they tax Z? So that in future they reserve the right to tax Z also, they generally define inclusively. The salary includes X and Y. They have not said that Z is not taxable or cannot be taxable. Okay. So, okay. Section 71. So what I was trying to say is that salary has been defined as inclusive of monetary and non-monetary components. So you can have monetary components where your salary will look like basic salary, dearness allowance, house rent allowance, this, that, this, which you will all get in money, in cash, in your bank account at the end of the month. Okay, as part of payslip. And then there are some non-monetary perquisites. I will give you a rent-free accommodation, you stay at my place. I will give you a car. I will give you a driver along with the car. I will give you a housekeeper. Okay, I will give you a mobile phone. So these things are non-monetary perquisites. So if any, these are not favors. Okay, they are not favors. They are all part of CTC, all part of cost to company, and it's all there in your employment contract. It's not that they are doing it gratuitously and nobody has to record anything. It's not like that. If it is given for your personal benefit and directly and tangible benefit goes to you, then it is very much taxable, even if it is a non-monetary fund. Okay. So, ma'am, we go to the office, we get a laptop to work. So, does it mean that the cost of laptop is also perquisite in my hand? Can anybody answer it? You go to an office and your employer gives you a laptop to work. What happens? It's taxable. Okay. Anybody else? Anything else? No, yes, no, yes. See, if they have given it to you at your disposal, then it is a tangible direct benefit to you. But if they have given it to you to use it while you are in employment relationship, and the day you will pack your bags, you need to leave it there and you need to leave the firm, then it is not your asset. It is an asset sitting in their books of accounts. They claim tax depreciation on that. Okay, they have just given you a company asset to use in your official duty. It was never yours. You are just using. You are keeping custody of it. It is the company's asset and it goes back to the company when you leave the organization. Then it is not yours. Therefore, it is not a non-monetary purpose. Okay, because this is very common, right? Whichever job you go and join, you will get a laptop. This will be very, very common. That's why I took this example. Okay. Section 17(1) includes, so there is a long list. Should we learn this? Ma'am, do I have to learn the definition of salary? No, you don't have to. Nobody will ask you, please define salary. Okay. Why you need to know is because they will give you different components in your sum and you need to know whether that is salary in the first place so that you can, take it in the computation. That's it. You just be with me when I'm reading it out. You don't have to learn it, memorize it. No. Okay. Section 17(1) includes wages, annuity or pension, means something that you get after retirement, maybe in lump sum or maybe in annual installments. Okay. After your retirement for some years. Gratuity, you may get a one-time benefit when you're leaving the company. Any fees, commission, perquisites, or profits in lieu of salary. What is profits in lieu of salary? At different places in the Act, when we study, you will come across that certain typical things have been also considered as taxable salary, and they have named it as profits in lieu of salary. That means it is in consideration of your employer-employee relationship at some point of time, and you are getting under that consideration. Okay. In lieu of the work that you have done, you are getting it. So, for example, from a past employer, you are getting annuity. You left one employer, and after leaving, they are giving you annuity. Now you have decided to join some other organization in the meantime, so they are giving you salary. So this annuity from past employer is profit in lieu of salary, in lieu, because it is in lieu of the relationship you had with the past employer, not with the current employer. Okay, so, and something that you have already done in the past. So therefore, it is called profits in lieu of salary. There are other such examples also in the Act. As and when we do, I'll tell you that this is profits in lieu of salary. But ma'am, if I don't understand whether it is profits in lieu of salary or just salary, is it a problem? No. You have to understand the tax treatment of the component. You need not know whether it is salary or profits in lieu of salary or what. If you know the tax treatment correctly, that's what you need to include in the computation. You don't have to give a background of what it is, what is the nature of that. Okay, so it's okay. Advance salary, because we know you are receipt basis, whichever is earlier. So if you receive an advance salary. Leave encashment. Leave encashment means when you get certain leaves from your company. Ma'am, just like in the telesales, salary is less, but compensation is more. Commission is more. Yes. Yes. If you are given a sales-based commission, that your fixed component is X, but if you give me so and so many sales, then I will give you a percentage of sales as commission. Then that is commission. But because it is happening in lieu of employer-employee relationship, that commission is also not business income. It is salary. Yes, telesales example is correct. Okay. What is leave encashment? So in the course of work, you get some leaves. Okay, some casual leave, sick leave, earned leave, and all that, and you use some leaves, and you at the end of the year you may see that you have not used some leaves, and they have accumulated, the balance is accumulated. In some companies, they have a policy that leave lapses. You don't get anything out of it. You either use it or forget it. In some companies, they may have a concept of encashment, that whatever leaves you could not use, you will get money in lieu of that. Okay, that is called leave encashment or leave salary. If you are given salary equivalent to the credit of leave lying in your account, account money, not bank account, in the records of the employer, that you were given 10 leaves, 7 of them are unused. Okay, so to the extent of credit standing in the records of the company, if you are given any extra salary, that is leave encashment. It may happen every year. It may happen only when you leave the company. It may not happen at all if your policy does not allow. If the company's policy does not allow any leave encashment mechanism. Okay, so it depends on the employment contract. Every question that you get, they will give you the facts that Mr. A is employed with X company, and X company has a contract to give the following benefits to Mr. X. So you will not get to see the employment contract, but you will be given a summary of what the contract contains. Okay. Provident fund contribution by employer to employees pension scheme. Okay, if employer contributes to employees pension scheme, there is some 80 CCD NPS account. What is all this? We will deal with it. Let's not digress now and get more confused. Contribution by central government in previous year to Agniveer Corpus Fund account of enrolled employee. This is also specific. We'll deal with it. Bonus, allowances. Okay, all these are by whatever name called. If it is in lieu of the employer-employee relationship, it is salary. Commission may be paid as a fixed turnover, fixed percentage of turnover on net profits also, like we were talking about the telesales example. Okay. Apart from that, they may give you allowances. What are allowances? Allowances are monetary. Essentially, they are cash payments only, given by employer to meet specific expenditure of employee, personal or official. So if suppose a house rent allowance, if the employer gives a specific earmarked money to employee that you use this to pay rent of your house, okay, it can be personal or official. All right. then those are called allowances. Specific earmarked payments to meet specific expenditure is called an allowance. Okay, and it's monetary. Whether it is taxable, may be fully taxable, may be partly taxable, may be completely exempt, depending on the allowance and the law prescribed. We will deal with the taxability of each of them. Okay. I told you earlier, salary means different for different purposes of the act. As and when we do it, you will get to know. At the end, when you get completely confused and jumbled up, then we will do a summary chart to help clarify that what is the meaning for what purpose. Okay. Taxation of salary components is different depending on whether the employer is under default tax regime or chooses to opt for normal provision. Because now there are two regimes. There is a normal regime, there is a default, that is normal provisions of the act, and there is a default regime, which is section 115 BAC. So depending on what the employee has chosen, some components taxation differs between the two regimes. So you will have to particularly take care of that in the question. The first thing you should read the question and underline is which regime are they asking you to calculate. The answer can be totally different if you have, if you misread that and you calculated under a different regime. So be very clear when you are reading the question, just underline which regime are they talking about and do the calculation according to that regime only. You need not give your knowledge about the other regime. There is very limited time in tax paper. Try to save time. Be clear in reading and focus only on what is asked. Okay. Default is old regime. Default is 115 BAC. The new regime is default regime now. And if you don't want to go for the new regime, then you have to choose for the old regime, which is the optional one. So the new regime has become the default regime. If you don't do anything, that is the regime which will apply. But if you want to remain with the old regime because it gives you some more benefits, some more exemptions as compared to the new regime, so you have to choose. You have to tell the employer that I want to go for the optional tax regime. Please deduct my TDS accordingly. Then they will do accordingly. Okay. Allowances. We were telling you a list that there are allowances. These are specific allowances which are fully taxable under both regimes. Whether it is normal, default regime, normal regime, whatever regime it is, these specific list of allowances are fully taxable under both regimes. Do we have to remember? I would say no. You remember where there is a different tax treatment prescribed. If there is no different tax treatment prescribed, then everything else is fully taxable. Okay. So do we have to remember this list 1, 2, 3, 4? No. If you find in the other places, let's go negatively, where you feel that there is an exemption, there is a specific provision, you remember that. And if there is something to which that specific exemption does not apply, then it is fully taxable. What is there to remember in that? Okay. Achha, one thing I want to tell you, that dearness allowance, in a lot of questions you will see DA forming part, and you will see, what is forming part? Part of what? You won't understand. So it's a language commonly used. Basically, if the terms of employment, that means your employment contract, says that dearness allowance will be included in the calculation of retirement benefits when you retire. Okay. DNS allowance will be included in the calculation. One thing is taxability, that how will you get the exemption for that purpose, whether DA will be included or not in salary. That is taxability. But one thing is calculation of the benefit also. Na? Suppose they want to see how much they should pay you as gratuity under the Payment of Gratuity Act 1972. Okay, and for that purpose, the employment contract has said that DA or DNS allowance should form part of calculation of retirement benefits. Then it is called DA forming part. Now, income tax provides specific, when it gives you exemption and different meanings of salary for different purposes, sometimes they refer to DA forming part. Sometimes they refer to only DA. Sometimes they don't refer to DA, they only say basic. Okay. So you may get confused. What is DA forming part? That's why I explained the background to you. But do you need to know it for your exam? No. They will give you DA forming part. You need to apply it accordingly. I have just given you a background to understand what is DA forming part. Okay. All right. Next. Somebody asked something. Ma'am, if I give house allowance and I pay those allowance in home loan, is it valid transaction? Sir, it is, ma'am, it is such a, it's such a specific question. Let's do it when we do house rent allowance. Okay. Can you repeat regarding remembering of allowances? Yes, you don't need to remember this list of allowances for the simple reason that you rather remember the taxability, the tax treatment where something is exempt, and where there is nothing specifically exempt, then everything is taxable. You remember in that way. Okay, because there can be, as the times evolve, there can be need for different things. So you will have more and more allowances getting into the list. It is not an exhaustive list, no? Suppose I tell you right now there are working mothers. Suppose the company starts giving fresh allowance. Then you will say, ma'am, wo to list mein nahi hai, kya kare? That's why I'm saying this is not an exhaustive list. The list is exhaustive when it comes to exemption. You remember that, and everything else is taxable. Okay. Means equal to exact definition. Yes. Includes means broader definition. Means is equal to x plus y. Includes is equal to x plus y plus dash. So that later they reserve the right to include something else, also z also, and say that we always meant that salary should also mean z. Okay. That gives them the right to tax a higher base. That's why lawmakers generally refrain from writing means. Okay. Okay, this is a very important slide. You can mark it. I would say more than 50% sums, if they come on computation of taxable salary, have a component called HRA. Okay, so it's an important one. You should really mark it and highlight it. Remember it. Learn the limits before going to exam. Ma'am, so easily you thought inclusive and exclusive. Okay, all compliments at the end so that we don't, class goes on. It's more important to finish the class. I will be very happy to hear compliments, but at the end of the class. Okay. Now, this house rent allowance is very, very important. As I told you, it's important for exams. What is the allowance? All allowances in general are for to meet any personal or official expenditure of the employee. House rent, as the name suggests, is paid to meet your rental expense. Okay, so you stay in a rented property, you have to pay rent. So company gives you house rent allowance so that you can pay rent to your landlord. Okay. So ma'am, I have my own house. Am I eligible? Yes. If your employment contract mentions HRA as a part of your salary, part of your CTC, then you will get HRA. You need not spend it. If you live in your own house, you don't pay rent, you don't spend it, but you can always get it if your employer wants to give it to you. Okay. So please do not confuse taxability with receipt or eligibility to receive. You can get this allowance even if you don't actually spend it, and you have your own house and it does not apply to you, you can still get that allowance. Okay, but will it be exempt? For that, you need to see the criteria. So the exemption is available only to that person who actually pays rent. Okay, anybody can receive it, but only that person who pays rent will get exemption. And exemption relates to the period for which accommodation was occupied by the assessee during the previous year. So suppose you paid rent for 12 months, but you did not stay there for those months during the previous year. Then the period for which you were not occupying the house and you were still paying the rent is not relevant for calculating exemption. You have to understand why they are giving you exemption. They understand the lawmakers understand the crucial need that you have to perform service, to perform employment service. You need to stay in a house. It is very primary. It's a primary need. Okay, and you need to pay rent if you don't own it. So they are giving you exemption that, okay, if you have to genuinely incur some expenditure of rent and you are occupying that house, you need to stay there while you are, to be able to even work. And therefore, we will give you exemption. But if you are unjudiciously using it in the sense that you don't pay rent, actually, you stay in your own house, or you pay rent, but you don't stay in that house, then you should not get exemption. That is not what the lawmakers wanted to do, right? So you need to understand why they made these kind of limits. And when they give you the exemption threshold, then they do it as a percentage of salary. Salary for this purpose means basic salary, DA forming part. What is DA forming part? I have already explained to you. And commission as a fixed percentage of turnover. So where the employment contract provides commission as a fixed percentage of turnover, then it has a specific meaning. Generally, that is included for these kind of purposes. And any other commission which they may pay, that is not relevant. Like variable performance bonus, those things are, not relevant. If it is fixed percentage of turnover, then it is relevant here. Okay. So salary means B plus DA forming part plus C. Okay. B plus DA forming part plus C. Just write it somewhere. Okay. How will you remember it later? I will tell you the memory techniques, because later you will get confused. Wow, Priya. DA means dearness allowance. Dearness allowance forming part that we were discussing for so long in the last slide. No, don't be sorry. My intention was not to embarrass you. I was just jokingly saying. Okay. So, dearness allowance forming part is DA forming part. Even in sums, you may find it like that, DA forming part. This is very commonly how they say it. Okay. Asha. List of the following is exempt under section 1013A. So whether I should remember the section number, need not, may not. But there are some sections which are so popular that there is no harm also. You can try to remember it. If you don't quote the section number, will I not get marks? Not like that. If you don't quote the section number, or if you feel that you will write a wrong section, then you better don't write anything. You will still get marks if you do the proper provisions. Okay. But some sections like this one is worth remembering. It's so popular in exams that it is worth remembering. That's what I want to say. Okay. For example, section BBA 115 BSc is a regime altogether. If you don't remember that, then it is you may just land in a different, you may compute it differently. So that you need to obviously remember. Okay. So the exemption limit is prescribed. Okay, when we do a sum, you'll understand better, but let's first understand what the law is. If the house is in a metro city, being Delhi, Kolkata, Mumbai, or Chennai, law prescribes only these 4 cities as one block and all other cities in the other block. You may say that, ma'am, there are some other cities which are growing even faster. Bangalore, Hyderabad, Pune, what happens to them? They may be very big cities. We don't mind that. But for this purpose, they are in the other cities block only. Okay. And Delhi, Kolkata, Mumbai, Chennai are the fixed list of cities in this block. Okay. If the house is in these 4 cities, any of these 4 cities, then the exemption is equal to the lower of the following. HRA actually received, rent actually paid minus 10% of salary, or 50% of salary. For the relevant period means for the period during which the accommodation was occupied. Okay. For the period for which the accommodation was actually occupied. Suppose his employment is ranging from the beginning of the year, but he went into that rented house in the middle of the year. Then the calculation will start from the middle of the year only for this purpose. When you take salary, you cannot take annual salary. No? You have to take salary for those middle of the year, that means say those 6-7 months only, when he has actually started occupying the property. Okay. This is about metro cities. What happens to other cities? First 2 points, exactly same. Last point, just replace 50% by 40%. Okay. Ma'am, how will we remember 50-40? Just accept it, even if you don't agree to it, that the cost of living in these 4 cities is perceived to be higher than others. I told you, accept even if you don't believe in it. Okay. And therefore, lawmakers have thought that I should give more exemption to metros and less exemption to others. Okay. This is the law. This may not be linked to reality. Okay. So basically, house rent allowance, everybody can get it, but it will be exempt in whose hands? Those who pay rent for the period for which they occupied the property. Salary means basic plus DA forming part plus commission as fixed percentage of turnover. Least of the following is exempt. That means HRA received less, least of the following is exempt. Point number 1, HRA actually received. Point number 2, rent paid minus 10% of salary. Point number 3, 50 or 40% of the salary depending upon the city. Everybody clear? Ma'am, do I have to remember the exemption thresholds? Absolutely yes. Absolutely yes. This one though you'll have to remember. I mean, learn it in any way it is possible. Okay. Let's do one sum because we've been talking and talking for so long. Let us do one question. Okay, it's 7:30. Our class is till 8:30. Do you want a brief break of 5 minutes? I cannot afford a longer break. I'm sorry. So let's do something. The question is displayed on your screen. If you come back from your break earlier, please read it. If you don't want to go on a break, just read it. And when I come, then we will discuss. This sum will be explained in Hindi, so you will be able to understand. And if you don't need a break, please read the sum. Hello. Let me know when you are back. Just keep putting in the chat box. Huh? Are you back? Are you back? Okay, if you are sending messages which you think you should not be sending in the chat box, kindly delete them. And if they continue, then action may be taken. Whoever is sending some messages which should not be sent, you very much understand. Okay, so either please delete them yourself or be please prepared for some action. Are you all back? Okay. Illustration 1 on HRA. Yeah. So I hope you all have by now read it. Mr. Narendra Sharma, aged 54 years, is an Indian citizen and carrying on retail business in Dubai. Does it matter whether he's working in whether he has a business in Dubai or not? Have you all done residential status? Yes. So you know now that there's a concept of deemed resident under section 6(1)(a). Does it ring a bell? Deemed resident. Yes. Yes. Okay. So these little pieces of information may be relevant from that perspective. So let's hold on. Huh? Okay. So Narendra Sharma, Indian citizen, he was in Dubai. He was doing some business. Now he decided to shift permanently to India and he closed his business in Dubai. So if I talk about the previous year in question, 24-25 is your previous year. Huh? So he came to India on 27th of November and then joined an Indian company in Mumbai from 1st of December. So his salary contract technically starts from 1st of December, but 27th November is relevant to calculate his days of stay in India and calculate his residential status and all that. Okay. From December 24, he has taken a flat on rent for 60,000 rupees per month from Mr. Sarthak, an Indian resident. And Mr. Sarthak has provided his PAN number to Mr. Narendra Sharma. Okay, so fine. 1st of December, he came to India and he didn't have a house of his own. He used to stay in Dubai. He took a flat on rent and from an Indian resident, and he has been, Mr. Sarthak has provided his PAN number. Is it relevant? You may get to know a lot of things in the question. Okay, and it's a big job to find whether it's relevant or not for that sum. So see, you have to deduct TDS on rent, right? So whether the person has provided PAN or not, person is Indian resident or not, that's why those things are given to you. But is this a TDS on rent question? No. So in this question, it is not relevant. Okay. Acha. All right. Now, following details of his salary income earned in India. Basic salary, so and so. Cost of living allowance, so and so. Cost of living is, in different ways they earn as allowance. It's the same thing. Okay, because it is supposed to meet the inflation, supposed to beat the inflationary changes which happen. So, and leading to increased cost of living. So it is that allowance only. You can say COLA or DA are the same thing. And it's mentioned that it forms part. So please, in your mind, immediately fix this is DA forming part. Okay, DA forming part. Is that relevant for HRA calculation? DA forming part? Yes. Somebody says 124 days means not resident. You wait for the sum now. Read the full sum first. Assuming Mr. Narendra Sharma is a deemed resident under Section 61A. Okay, you do not have adequate information to check his residential status. You only have the days of his stay in India during this year. You don't know what happened in the last 4 years. You don't know whether his income from for other sources is how much. You don't know whether he was liable to tax in Dubai or not. You don't have all pieces of information to comment on residential status in this sum. You have been told that assume he is a deemed resident under Section 61A. Okay, and he wants to exercise the option to shift out of the default regime. That means he wants to remain in the old regime. He wants to remain in the old regime. Okay, then calculate taxable income from salaries. Ma'am, should we calculate allowances for rest of the month since it says per month? He has joined on 1st of December. So you will calculate from December only. Na? If he was not there, you have to start from the date of employment contract. Na? You cannot start from prior to that. Right? Chalo, okay. Has anybody started solving? Have you started plotting the annual salary? Somebody said, please explain in Hindi. Because it's a second repetition, then therefore I may use the privilege of talking in Hindi for this, so that others have also understood in the first go. Have you started plotting the salary components? First, you need to plot the salary. How many months, how much you calculate by the fixed salary per monthly salary. You determine the number of months of actual service, and you find out each of the components firstly. Then we do the exemptions. Yes. Yeah. So you calculate the basic salary under the optional regime because the law says that this is optional. Okay, let us first focus on the calculation of the allowances. Basic salary, how many months? December, January, February, March, 4 months. Now monthly salary into 4, calculate. COLA or DA forming part, monthly component into 4. Other allowances, monthly component into 4. HRA, monthly component into 4. So you have got all the components. I hope this is clear. Now we have to calculate HRA exemption. We need to know the rent paid. How much is the rent paid? 60,000 into 4. Okay. So 2,40,000. 60,000 is monthly rent. Na? You need to again rent for the relevant period, for the period for which he was occupying the property. Okay. So 50%. Okay. Which city were we talking about? Mumbai, right? Mumbai is part of metro or non-metro as per the list given to us? Metro. So rate of percentage will be 50%, not 40%. So you calculate 50% of salary, but salary should be basic plus day forming part plus commission as fixed percentage of turnover. Here you have no detail of any commission, so you just take basic plus DA forming part. Okay, and they have said the entire DA forms part. Sometimes they say 60% forms part, so you need to calculate 60% of DA. Okay, here 100% forms parts. Fine. So you just add up 11 lakh 2,700 and 4 lakh 80,800. You get an amount of 15 lakhs 83,500. That will be your salary for this purpose. Okay, into 50%, and you get an amount. Then you calculate rent paid minus 10% of salary. So 2,40,000, like we said, 16 to 4 minus 10% of the salary. So we got an amount. And then we see HRA received. HRA received, as we have seen above, is 5,51,000. The lower of the three will be how much? 81650. So what is the amount eligible for exemption? 81650. Okay. So if we remove this exemption from the other taxable components, we derive a gross salary of 26,77,202. Have you all got it? Are we all on that same page? Yeah. Oh, okay. I'm sorry. Okay, now it's visible. Okay. So gross salary, has everybody reached there? We first calculated all the allowances for the relevant period. Then we calculated the exemption of HRA. We applied the three thresholds. We found out the lower of the following. And then we reduced the exemption from the other taxable allowances and found out the gross salary. We know in this sum that the person is in the optional regime or old regime. Okay. Now you haven't already studied standard deduction. We told now in the beginning that there is section 16. It gives you 3 deductions: standard deduction, professional tax, entertainment allowance. Okay. So standard deduction is a flat rebate. Whether or not the question will ask you, you need to give to the employee. Okay. But other things, entertainment allowance, professional tax, they have to first give it to you in the question. So standard deduction is a flat rebate you need to provide. So for people who are in the optional regime, the amount of standard deduction is 50,000. We will do this later, but because it has already come as part of the sum, I need to introduce this here. Had this been default regime, then this exemption may not have been available. Okay. And in the first place, so because we are calculating this exemption, it's relevant in the old regime. It's not relevant in the new regime. You may have, in the new regime, you have to forego a lot of incentives and deductions, okay, and exemptions. So this being one of them, that also we will discuss later. What all you need to forego in the new regime. Old versus new regime, we will discuss. Meaning of salary for different purposes, we will discuss. Okay, all of those we will recapture it at the end. But as and when it comes in a few sums, then I'm just introducing those concepts to you. Here in the optional regime, the amount of standard deduction is 50,000 or amount of salary, gross salary, whichever is lower. Here, obviously, 50 is lower. So we have reduced 50 and we have derived the net salary. Is it okay? Everybody on the same page? Okay, somebody who didn't understand, just repeating in Hindi because this is an important topic, HRA. Gross salary हमने कैसे calculate किया? सबसे पहले हमने सारे components को plot किया, क्योंकि the person was not working for throughout the year. वो उस previous year में सिर्फ December onwards काम कर रहे थे. उन्होंने खाली 4 months काम किया है. तो हर component को हमने 4 months के हिसाब से calculate किया कि for the previous year salary होती कितनी है. उसके बाद हम निकालते हैं कि अगर आप ऑप्शनल रेजिम में हैं तो आपको एग्जेम्पशन मिल सकता है. अगर आप डिफॉल्ट रेजिम में होते हैं तो ये वाला एग्जेम्पशन मिलता भी नहीं, हम निकालते भी नहीं. पर क्योंकि ऑप्शनल रेजिम हमको पहले ही बोला गया है तो हमने एग्जेम्पशन निकाला. एग्जेम्पशन के लिए हमने 3 थ्रेशोल्ड्स चेक किए. 50% ऑफ सैलरी, क्योंकि ये आदमी मुंबई में है, मुंबई इज वन ऑफ द स्पेसिफाइड मेट्रो सिटीज, तो 50% of salary. Salary की meaning for this purpose is basic plus DA forming part plus commission of as a fixed percentage of turnover. Commission इस सब में दिया नहीं है, पर basic forming part basic दिया है और DA forming part दिया है. तो उन दोनों components को add करके हमने उसके ऊपर 50% निकाला और side कर दिया. फिर हमने second criteria देखा, rent paid minus 10% of salary. Rent paid is 60,000 into 4. -10% ऑफ वही सैलरी का बेस हमने उसको अलग कर दिया। फिर हमने HRA रिसीव्ड उसको अलग कर दिया। इन तीनों को कंपेयर करके निकाला कि लोअर ऑफ द फॉलोइंग है क्या, तो निकला कि रेंट पेड -10% ऑफ सैलरी सबसे कम है। जनरली वो ही सबसे कम होती है, इवन इन प्रैक्टिकल लाइफ। तो उसको हमने ऊपर से लेस कर दिया। तो सारे जो अपने कंपोनेंट्स कैलकुलेट किए थे 4 महीनों के लिए, उनमें से HRA का एग्जेम्पशन लेस कर दिया। फिर निकला ग्रॉस सैलरी, उसके ऊपर हमने दिया डिडक्शंस अंडर सेक्शन 16, जिसमें बाकी दो कंपोनेंट्स का तो डिटेल ही नहीं है सब में, खाली स्टैंडर्ड डिडक्शन है जो हमको ऐसे भी और वैसे भी देना है, क्वेश्चन बोले या नहीं बोले। ये बहुत लोग भूल जाते हैं, ये आपको याद रखना है। सैलरी के केस में एक चेकलिस्ट बना लें कि सब में हमको कुछ कुछ चीजें तो याद रखनी है। स्टैंडर्ड डिडक्शन इज वन सच आइटम, क्योंकि आपको क्वेश्चन प्रॉम्प्ट नहीं करेगा, आपको बिना प्रॉम्प्ट के उसको अप्लाई करना है। तो आपको याद रखना है कि कुछ ना कुछ स्टैंडर्ड डिडक्शन तो मुझे देना ही है। अब मैं देखूं कि कौन रजीम में है, अगर ये डिफॉल्ट रजीम में है तो मैं 75,000 दूं, अगर ये ऑप्शनल रजीम में है तो मैं 50,000 दूं, लेकिन कुछ तो मुझको देना ही है। ठीक है, स्टैंडर्ड डिडक्शन देने के बाद हमारा नेट सैलरी आया है। आई होप दिस इज क्लियर। और वही अगर ये मुंबई नहीं पुणे में होते तो वो मेट्रो सिटी नहीं होता, ये पूरे सम में सब कुछ सेम रहता, पर जहां हमने 50% ऑफ सैलरी किया है वहां हम 40% ऑफ सैलरी कैलकुलेट करते। फिर भी जहां तक देखने से लग रहा है सेकंड कंपोनेंट लोअर ही आता, लोएस्ट ही आता, तो शायद ओवरऑल आंसर अफेक्ट नहीं होता, पर HRA का एग्जेम्पशन अफेक्ट होता। और स्टेप मार्क्स दिए जाते हैं सम्स में, तो आपको इस एग्जेम्पशन लिमिट पे भी स्टेप मार्क्स होंगे, वो आपके चले जाते हैं। ठीक है, that would be the difference if the city changes. How every detail matters. How every detail matters. ये जो दुबई वुबई इतना बैकग्राउंड दिया गया था, it was just to set up a case कि भाई ये डीम्ड रेसिडेंट है। अगर आपको थोड़े और डिटेल्स दे दिए जाते तो शायद आपको रेसिडेंशियल स्टेटस भी निकालना पड़ता। यहाँ आपके पास डिटेल नहीं थे, इसलिए सब में खुद ही उन्होंने बता दिया कि अज्यूम ये डीम्ड रेसिडेंट है। ओके, नॉन रेसिडेंट होता तो फिर एक अलग कहानी होती। ठीक है, क्योंकि स्कोप ऑफ इनकम जो टैक्सेबल होता है वो चेंज हो जाता है। कैन यू प्लीज शो द क्वेश्चन। देखिए, आपको अगर स्लाइड्स देखना है आगे पीछे, यू हैव द PPT अपलोडेड ऑन द पोर्टल, you can always go and refer it back. Obviously you cannot learn the question, you have to refer it to it, but I cannot keep displaying the question, तब हम लोग sum solve कैसे करेंगे? What is the purpose of 50% that we calculated? In this sum it turned out that 50% is higher of the, I mean is a higher, one of the higher limits, and therefore it was not relevant. But otherwise HRA exemption mein one of the criteria is 50% of salary if a metro city and 40% of salary if a non metro city. That's why we calculated. मैम वॉइस नहीं आ रही, किसी को नहीं आ रही? तो ऑडियो इज फाइन। 10% is gross salary or net salary? 10% is salary for the purpose of HRA. 10% is of basic plus DA forming part plus commission as fixed percentage of turnover. Okay. For this purpose, salary has been specifically defined. It is neither gross nor net. It is something else. It is basic plus DA forming part plus commission as fixed percentage of turnover. सेस कहाँ से आ गया अभी? व्हाई आर यू टॉकिंग अबाउट दैट? अभी हमने टैक्स कहाँ कैलकुलेट किया है? हमने तो सिर्फ टैक्सेबल इनकम कैलकुलेट किया है। ओके, चलो। Okay, tech team, please confirm if there is an audio issue because some people are facing. Ma'am, that 50% we have to just calculate and leave it. You have to calculate all three things and then take the least of them. तो उसमें दो वाले तो ऐसे ही रह जाएंगे ना, आपको लगेगा फालतू ही कैलकुलेट किए, लेकिन करना तो पड़ेगा ना, स्टेप मार्क्स तो है। ठीक है, ऑलराइट, ऑडियो क्लियर है, थैंक यू। नेक्स्ट, दिस क्वेश्चन वाज वेरी सिंपल क्वेश्चन, बट बी प्रिपेयर्ड, इस टाइप के क्वेश्चंस बहुत पॉपुलर है एग्जाम्स में, प्लीज इसको मार्क कर लो, एग्जाम के पहले जरूर करके जाना। मतलब HRA इन जनरल एंड एनी सोल्यूशन जस्ट एज, और हाथ से प्रैक्टिस करके जाना, याद कर करके मत जाना। हाँ, एक ऐसा सैम्पल सोल्यूशन जब आप पढ़ते हो, नॉट ओनली फॉर दिस चैप्टर, नॉट ओनली फॉर दिस सब्जेक्ट, anything which you think you need to see before the exam, okay, you mark it separately, you refer the page number or something, you know, in a separate diary or something, and usko हाथ से लिखना as far as possible and then go to the exam. Okay, you will remember it better. The retention increases manifold if you write and learn. You cannot write the whole textbook, so that's why identify those slides only which you will do that, which you will write later. Okay. Acha. Allowances partially exempt under optional and partially fully taxable under default. So एक ऐसे भी कैटेगरी ऑफ अलाउंसेस होते हैं जो ऑप्शनल रेजिम में, मतलब ओल्ड रेजिम में पार्शियली एग्जेम्प्ट होते थे, बट डिफॉल्ट रेजिम में फुल्ली टैक्सेबल होते हैं. ओके, और वो तो नेचुरल है ना, क्योंकि डिफॉल्ट रेजिम इज was brought with the concept that you have to forego your incentives or exemptions. Okay, so let's see what they are talking about. There is a list of exemptions under section 1014. Do we need to remember the section or the rule to be? No, may not be. But to understand the classification, it's important to know what is 1014 subclause 1 and 1014 subclause 2, क्योंकि दोनों में थोड़ा फर्क है. Okay, वो इस स्लाइड में हाईलाइट किया है. Conceptually you need to remember. सम में क्या बोलना पड़ेगा या ये नहीं पता होगा तो क्या सम नहीं सॉल्व होगा? Not really. सम फिर भी सॉल्व हो जाएगा. It's only a concept, which better if you know understand thoroughly now, so you need not go through it at the time of exam. अच्छा. So 1014 subclause 1 is about special allowances or benefit to meet wholly and exclusively official expenses. This is for official expenses. Okay. There is no prescribed maximum exemption limit. Very important. There is no prescribed upper limit. Actual expenditure actually matters. Actual expenditure matters. It is exempt to the expense to the extent of expense incurred or allowance received, whichever is lower. And examples like helper allowance. Provided helper is not for your house, helper is for your official duty, because the heading of this category is exclusively and wholly official expenses. Okay, so helper allowance for official duty, research allowance given by educational institutes, because when you are doing research, when you do empirical studies, you may have to incur some expenditure, and if it is a research institution which is giving a research allowance, then fine, then you can apply for this exemption. And uniform allowance. So suppose you work in a factory and there's a specific uniform that you should wear for your safety purpose or whatever it is. They have given you a uniform, specific uniform to wear, and for that they are giving you an allowance. You use that allowance to buy the uniform. You have to compulsorily wear it also. Then it is exclusively for official purpose, and you actually incurred the expenditure also. So this category of allowances is one basket where it is official, actual expenditure matters. There is yet another category which is 1014-2, which is to meet personal expenses. Okay, where you are posted. So suppose you were posted in a different place away from your home, and you have to incur certain personal expenses also, but indirectly they are required for your work, because you have to work over there and you need to sustain yourself in the first place. So indirectly connected with your work, but primarily personal in nature. Okay. What are they? Now in that there is a maximum exemption limit, that something, these kind of expenses can be exempt only up to max of this limit. There is a fixed monetary limit, and their actual expenditure does not matter. So there what matters is maybe what you have received, how much allowance you have received, and how much is the maximum exemption limit. It doesn't matter how much you actually incurred out of that allowance and how much you actually saved. Okay. All right. So we are talking about 1014-2 now, because 1014-1 we did some examples like helper, uniform. Now 1014-2, let's do those examples where it can be personal expenditure in the place of posting to compensate for cost of living, for example, and where actually there is a maximum exemption limit and actual expenditure does not matter. So you don't have to give proof of actual expenditure to your employer because they don't need it anyway. Okay. All right. see what are they. Now there is such a long list, मैम ये सब याद करना पड़ेगा क्या? पॉसिबल नहीं है, इतना सब कुछ एग्जाम में पॉपुलर भी नहीं है. ओके, तो आप देख लो, बिकॉज आई हैव टू टीच, बट द वंस विच आर इन बोल्ड दे आर मोर इम्पोर्टेंट फ्रॉम द परस्पेक्टिव ऑफ फ्रीक्वेंसी इन एग्जाम्स. दे आर मोर पॉपुलर इन एग्जाम्स. ओके, बाकी सब इतने स्पेसिफिक है ना, स्पेशल कॉम्पेंसेटरी, हिली एरिया, ट्राइबल एरिया, एवलांच, field area, modified field area, underground mine. They are so armed forces allowance, Lakshadweep Islands allowance. They are so specific expenses, allowances कि वो इतने पॉपुलर नहीं है इन जनरल एग्जाम्स. अब आ गया तो आपको वही लिमिट लगाना पड़ेगा, बट आप कितना याद करोगे? सो द मोर प्रैक्टिकल वे इज कि एटलीस्ट रिमेंबर द 5 and 6 वाला पॉइंट, द वंस व्हिच आर इन बोल्ड, बिकॉज दे आर एप्लीकेबल टू नॉर्मल एम्प्लॉइज आल्सो, not those specific cases. And that would be easy to remember also. Children education allowance is exempt up to 100 per month per child. So there is a maximum exemption limit. Doesn't matter how much you spend. 100 रुपए per month में कौन सा बच्चा पढ़ता है आजकल? But that's how the limit is. So it is absolutely regardless of the actual expenditure incurred. अगर आपका बच्चा मतलब इस so that is relevant, but if the actual expenditure is less, suppose मतलब 100 रुपया per month is a very decent, very modest expense also. But what happens if the actual expenditure, for example, in a hypothetical situation, if the actual expenditure is even lesser than 100 rupees, then what do you do? You cannot exempt something more than what has been received, na? Because you will, if less than fully exempt, yeah. Suppose for example, 70 rupees per month was incurred for one child. Okay, that's less than 100. You could have got exemption up to 100, but आप क्या -30 तो नहीं करेंगे ना? तो इसलिए 70 में 70 तक लिमिट हो जाएगा exemption. Okay, so if the generally these are such modest amounts कि इसके ऊपर ही actual expenditure होता है, but in a hypothetical situation अगर इससे भी कम expenditure हो तो exemption is capped to that. Okay, hostel allowance is 300 per month per child up to 2 children. मैम थर्ड चाइल्ड हो तो क्या होगा? क्या करेंगे हम लोग? देखो, आपको अगर आपकी कंपनी मोर देन 2 चिल्ड्रन के भी अलाउंसेस देती है तो आपको कंप्यूटेशन में तो लेना ही है, ग्रॉस मतलब इंक्लूड करना है ऊपर. एग्जेम्पशन में एग्जेम्पशन नहीं है. ओके, द कैपिंग इज नॉट ऑन द नंबर ऑफ चिल्ड्रन, इट इज ऑन द एग्जेम्पशन. यू डोंट गेट टेक एग्जेम्पशन ऑफ दैट. ओके, ऑलराइट. Now we come to a different category, which is allowances which are partially exempt under both regimes. So this is a very specific, I mean, this you should definitely remember because there are very few cases which few incentives or reductions which you enjoy even in the new regime. Okay, that's what makes it very important. So these are list of allowances under the same sections 1014(1) and 1014(2). But the category here is that they are partially exempt under both regimes. Whatever we discussed earlier, suppose children education allowance, that was exempt partly in the optional regime, but fully taxable in the new regime. Okay, but this is a case where we are dealing these specific lists that you are seeing. This list you should learn also. I mean, this list you can definitely learn because it is partially exempt under both. So if you don't remember this, you will not be able to apply it correctly. Okay, so 1014(1) matlab official expenditure and linked to actual expenditure incurred. So here, traveling allowance for cost of travel on tour or transfer. So suppose you are posted in a city, say Kolkata, and you have been sent on travel, official tour to any place, say Mumbai, or you have been posted in Mumbai. So you have to relocate, you have to transfer. So whatever traveling allowance is given to you in that connection, that is official expenditure and up to linked to the actual expenditure incurred. that is partially exempt under both regimes. Daily allowance in the place of posting, conveyance allowance. These are conveyance allowance means commuting to and from office and home. That is partially exempt under both regimes. But transport allowance 1014(2), which is personal expenditure at the place of posting, there earlier transport allowance was exempt up to a certain limit for all, exempt for employees who are blind, means challenged in some way. Okay, challenged in some way that they cannot use public commutes, maybe for some reasons. So they have to be given a specific allowance for transport. So for them, there is a specific exemption of up to 3,200 per month. Is the audio still breaking? Orthopedically means orthopedic, आपने डॉक्टर orthopedic डॉक्टर सुना होगा जो बोन्स और मसल्स और ये सब का इलाज करते हैं. So orthopedically means physically say paralyzed or challenged, and in the law they have given certain criteria also कि कितना % disability है. Hello. Okay, fine. So I was just saying, I'm just repeating 1014(2). 1014(2) is about personal expenditure, which and where actual spending doesn't matter. So for those employees who are blind or deaf and dumb or orthopedically handicapped, means physically paralyzed, or for some reason where they are not able to avail public transport. So for them to facilitate their commuting between the place of residence and place of duty, they have been given a specific exemption under both regimes, which is 3,200 per month, up to 3,200 per month. And actual spending, they may have spent actually 1,600, but that doesn't matter. They will get 3,200 per month, up to the amount actually received. Okay. Okay. Will you provide separate questions? Yes, all questions will come. This is the first class, so we are more into concepts. In the latter classes, there'll be more of solutions, practical questions and answers. Okay. I hope you have been able to hear the earlier part, and only 1014(2) audio was breaking, and now I have repeated, so you are all on track. Please confirm. Yes, ma'am. Okay. So hope everything is clear. You have, through repetition, you have been able to get everything. Okay. So let's do one solution, small solution on children education allowance. Please read the sum very quickly. Very, very small, sweet sum. Your voice is clear. Thank you. Mr. Shrikant has 2 sons. He receives children education allowance of 150 per month for elder son, 70 per month for younger son. So anyway, and his sons are going to school. So that means not hostel, school. Okay. He also receives following allowances: compute taxable allowances, transport allowance, tribal area allowance. So please calculate the taxable allowances. Have they mentioned which regime in the question? Have they mentioned which regime? No. Then what will you do? If they have not mentioned which regime, what will you do? You don't get to ask the invigilator, please clarify. What do you do then? See, if it is a very small sum and you know that you will not be wasting too much time to do both of them, and the marks, suppose there is 3 marks for this sum, please do both. If it is not a very long sum and if you feel that you will be able to manage within the time, please do both regimes if nothing is mentioned. If you think it's a very long sum, I will miss the paper if I just keep solving this sum under two regimes. Then you make an assumption of default and you solve under that. Okay, this is a very small sum. Please solve under both regimes in this case. Okay, that's my suggestion to you. If you're running out of time, make an assumption and proceed. Okay. So let's first see what happens under the default regime. Default regime of 115 BSc. First of all, let's calculate the children education allowance for the elder child. So there are two children and exemption will be available up to two children. So fine, both of them will get. And the limit is 100 per month, right? CEA limit was 100 per month. Hostel allowance limit was 300 per month. Okay. So elder son is getting 150, out of which 100 is exempt. 150 minus 100, 50 per month into 12 months. That is the taxable CEA for elder son. Okay, 600, correct. Then CEA for younger son. Younger son is only getting 70. So you can provide maximum exemption up to 70. So 70 minus 70 is 0. So taxable CEA for younger son is nil. Very good. Transport allowance, you're getting 1800 for per month. Now, if in the sum they have not mentioned when did the employment start, then please assume that he was on the payroll for 12 months, entire year. Okay. If number of months is not clearly mentioned, then please assume 12. That means he was there for throughout the year. So transport allowance will be 1800 into 12, fully taxable. Okay. Right, this we are talking about the which regime are we talking about, because we have taken some exemptions. So which regime are we talking about? Optional regime. Under optional regime we are taking exemptions of CEA. Okay, all right. And then there is a tribal area allowance. Tribal area, so there was a long list now. If you see there, tribal area allowance was exempt up to 200 per month. Now, ma'am, you told me not to remember the list, but C200 is getting applied. This is a very unique case. Normally, you will not get. How many will you remember? If you can, very good. If something like this comes, you may have to even apply it. But if you can't, then the risk of something like this coming up is very low. That's all I have to say. You should remember everything, but if it is not practical, then only remember the ones in the book. That is the children education and hostel. Tribal area exemption is 200 per month. So 500 minus 200, 300 per month into 12 months. Okay, that will be the taxable tribal area allowance under the optional regime. What happens under the new regime, under the default regime 115 BSc? There is no exemption. So all the allowances are taxable. Okay, all of these allowances are taxable. You will just calculate 150 into 12 plus 70 into 12 plus 1800 into 12 plus 500 into 12. Okay, all of them, but because they have asked you to calculate taxable allowances, it's not that you will add all of them and then multiply by 12. You need to calculate each of them individually and then show a total that this is taxable allowance under the default regime. Okay. So just give me the number. What is the taxable amount in the optional regime that you all got, the total? 25,800, and in the default you must have got 30,240 because that is simple maths and nothing else. Okay, so this was the solution, 30,240. Absolutely, this was a very easy sum, so we'll not waste more time on that. Let's go to the next category of allowances. So we have done some allowances which are fully taxable under both regimes. We have done some allowances which are partially taxable under the default regime, but fully taxable under the old regime. Then we have done some allowances which are partly exempt under both the regimes. Now we are doing some allowances which are fully exempt. Here also there are two categories. One fully exempt but only under optional regime, and one fully exempt under both regimes. Okay, ma'am, how will we remember all this? Try to remember, and I'll also try to make a summary at the end to understand. Anyway, regime, old versus new regime, what are the differences? I will give you a summary, don't worry. Okay, allowances fully exempt under optional regime. Allowance to Supreme Court, High Court judges, salary pension allowances from United Nations organization to its employees, sumptuary allowance to Supreme Court, High Court judges. Okay, so if you, these are like very, very prominent or typical posts, distinguished posts, I would say. Okay, therefore they have been specifically given a specific full exemption. Okay, a privileged full exemption, you can say. And allowances which are fully exempt under both regimes are those paid by the government to Indian citizens for services rendered outside India. You remember we were talking about Indian citizens who, suppose the person in the embassy who was posted outside India and he rendered services outside India. So anyway, because services were rendered outside India, so the accrual has also not happened, and they have specifically exempted it also under section 10(7). Okay. Now we will start another limb altogether. After doing these allowances, we will touch upon some terminal benefits. Terminal benefits, like I introduced earlier in the class, the terminal benefits means when you're at the end of the service, at the time of retirement or superannuation, or you are leaving the company. Okay, at that time, certain one-time benefits accrue to you. And they have a typical taxability which is laid down in the law. In fact, there is a typical exemption. Okay. What are those benefits? There can be pension, there can be gratuity, there can be leave encashment, there can be retrenchment compensation, there can be voluntary retirement scheme, VRS. All right. So we will do the taxability of each of them. So you will eventually remember all of them. Let's first start with pension. Now, pension kya hota hai? It's normally after retirement, you get something either in lump sum or as annuity. Normally, general thing is you should get it as annuity after your retirement, and after your death, your family may get. Okay. So some payable in respect of a particular year, you were actually performing a service in earlier year, and you are now getting something in lieu of that, recognition of that past service. You're getting something now, and after your death, your family may also get. Okay. So annuity received by present employer is taxed as salary, but annuity received by past employer, you have switched job and your past employer is paying you pension, that is taxed as profits in lieu of salary, because it is in recognition of a past employment, and technically you do not have employer-employee relationship with that ex-employer now, but because it is in connection with services rendered when you had a relationship as employer-employee in that earlier year, therefore, it is called profits in lieu of salary. So I told you that, I will give you examples in the course of the classes that what is actually profits in lieu of salary. What are those examples, live cases? So one of them is this: annuity or pension annuity received from past employer. Okay. Annuity received from person other than employer. If you receive annuity from person other than employer, then employer-employee relationship is absent. Can it be taxed as salary? No. It cannot be taxed as salary. It should be taxed as income from other sources. In fact, the family pension that we were talking about, that if your family gets pension after your death, okay, then in normal cases that is taxed in income from other sources, because family does not have employee relationship with employer, right? And the accrual to them has happened because of death of the employee. So it is accrued to them as family of the employee and not to the employee. Therefore, the relationship cannot be the employer-employee relationship, though it may emanate from the contract of employment, but the relationship is a family of employee and employer, and therefore it will be taxed in income from other sources. Okay, now pension has two parts, commuted and uncommuted. Listen to me carefully, because in the sums you will only hear commuted, uncommuted. Nobody will explain to you what it is. Okay. Now, once if it is clear to you, even before the exams, you don't need to read these slides. These all introductory slides, you really don't need to read before exams. You need to remember the exemption thresholds. Those things you brush up before exams. These things you listen to me carefully and try to understand the concept. Okay. Commuted means, normally pension is annuity after retirement. Commuted means if you want or if you elect that a part of it you get as lump sum now only, and you receive the rest of it later in annuity. That means out of the whole annuity, instead of receiving rupees X over 10 years from now, you want to receive amount Y right now, and based on the present value of the future right that will accrue to you, and balance you want to receive in the subsequent years. So if you convert a part or full of your annuity into a present immediate lump sum payment, then it is called commuted pension. And if you let it be, don't aggregate it, you let it happen as annuity over the years, then that is uncommuted pension. The taxability of both is different. Commuted pension, generally law does not recognize it through any separate lens. Commuted pension, you will not see anything in the law because it is fully taxable. There is no specific benefit. Benefit is only for uncommuted pension because you are getting over the years. Okay. And it is genuinely to meet your cost of living over the years when you will not be in source, in receipt of any primary source of income. All right. So uncommuted pension is the balance payment. Now there is a separate specific exemption available for that under section 1010A. Do I have to remember the section? Again, it's optional. You may remember, may not remember. But just remember, the very, most of these terminal benefits, the very good part about them is generally the exemption is available. Now, if pension is received by, hello, voice is not audible. I don't know, with no change in the background, I don't know why is the voice breaking. Now it's audible. Okay. Okay. I'm sorry, I don't know why it's happening. There is actually no background noise. Pension received by central government or state government employees being gallantry awards. Okay, gallantry award winners like Paramveer Chakra or something like that. So if central state government employees are winning a big awards like these, Paramveer Chakra, etc., okay, then that kind of pension is exempt under both regimes. In that case, family pension is also exempt on his death. Okay, but that is a very, very specific case to honor the contribution of that person to India in general. Okay, so these kind of gallantry award winners, they enjoy separate exemptions, but general people, commuted pension fully taxable, uncommuted pension partly taxable, and we have the limits in the next slide. Okay, disability pension given to disabled personnel of armed forces if they were invalided out of service on account of the disability. Basically, suppose there was a person in armed forces who went on a war, and in that process he got disabled. While fighting the war, he got disabled. He had a disability, but that got aggravated because of the war. Okay, then in that case, so to people to whom the country owes actually, they have suffered because of they were fighting in the war. For in that case, if they receive disability pension, then that is also exempt. Okay, so these Paramveer Chakra and the disability pension, these are very specific cases in recognition of somebody's contribution to India, and therefore they are exempt. But otherwise, in general, the limits like that I'll be showing you now, those are the limits which apply to regular employees. And these are the limits which normally you have to apply in exams. Okay. So see, uncommuted is fully taxable. It ends there itself. You don't have to further progress. Let's see the commuted side. If the recipient is central government, local authority, statutory corporation, civil service, defense service, this kind of employee, if it is this kind of employee, then it is fully exempt. But if it is any other kind of employee, not being central government, see, state government is missing there. State government employee will be other employee only. Okay. So if it is any other employee, then you need to see whether employee also gets gratuity under Payment of Gratuity Act 1972 or does not get gratuity. Employment contract provides for gratuity or does not. If employee gets gratuity under Payment of Gratuity Act, then the exemption limit is 1/3 of commuted pension received divided by commutation percentage into 100. That would be exempt. Ma'am, what is all this? I cannot understand. when we do a numerical example, you will definitely be able to understand. Okay, and you have to learn the limits. There is no other way anyway. So you can tick this slide. You need to see this before exam. Okay. And if the employee does not receive gratuity under Payment of Gratuity Act, so the lawmakers think, "Arey Baba, ye to usko to gratuity bhi nahi milta hai. Let us give him some more exemption." Therefore, that way you may remember that in this case, the exemption is slightly more. Tell me which is more, 1/2 or 1/3? Which is a higher amount? 1/2 or 1/3? If exemption is 1/2 is higher, so for somebody who does not get gratuity, lawmakers are kind of sympathizing with that person and saying that by you take a little more exemption. Okay, so therefore they are giving them more exemption, that is 1/2 instead of 1/3. They are giving them 1/2 into commuted pension received divided by commutation percentage, that would be exempt. And Supreme Court, High Court judges, they will be entitled to exemption of the commuted pension. Do we need to remember this? 10, 10, 1 clause, this, that, A, 2, B, B? No, don't have to remember. But 10, 10A, broadly you can remember. I will share a learning technique also when you have done all the terminal benefits. They fall very chronologically. Like gratuity will be 10, 10, pension will be 10, 10A, then there will be something 10, 10 AA, then there will be 10, 10B, then there will be 10, 10C. So I'll give you a acronym to remember that. You will be able to remember them. And the sub-clauses, you don't need to remember. Just remember central government, local authority, stat corporation. Statutory corporation means corporation formed under any act of the parliament or legislature. Okay, so formed under any statute. And civil service, defense service, those kind of employees, fully exempt. Other employees, this route. Receipt of gratuity, 1/3. Non-receipt of gratuity, 1/2. Of what we will do. When we do sums, you'll understand the base. Okay, so at 8:25 we are now, and I would not like to do this sum now because you may not understand fully. We'll take this up in the next class then.
Yeah, thank you, Shreya. Just a second.
Yeah.
Yes, Shreya. So students, this is what Shreya ma'am has taught you for this session. So just student, I just want to know from all of you, have you just found the session, interesting and interactive? You can chat, message me through the chat. See, students, yes, today actually, as you all maybe know till now, that there are total 5 heads of income in which your income, assessee's income, is chargeable to tax. One of the first head is your salary head. Okay? So today we are starting the salary. For each all of 5 heads, there is a one charging section. What do you mean by charging section, students? Okay, Dhanush, I will tell ma'am to be a little slower because because while teaching the provision, maybe ma'am has, just like I saw regarding a pension, because that limits are there. So as one of the student also asked, ma'am, this limit I am not able to understand, because actually in salary students, the problem is that there are so many limits are there, na, so you have to remember all the limits. There was separate limit for standard deduction, for pension deduction, pension exemption, then for gratuity exemption, then for provident fund, there is interest limit, then there like for motor car perquisite, for rent-free accommodation, for all the things, there are different limits. So yes, you have to remember that limit. So where I was regarding the charging section. So just tell me, student, what is the charging section for salary? Because ma'am has started. Yes. Yes, Mahalakshmi. Yes. Because student, in every head there is a charging section. So in for salary, to any income to be taxable under the head salary, there's a charging section, section 15. No, Abhinav, it's not section 9. Section 9 is for your deemed to accrue a rise in India, which you have already covered in your residential status. I'm talking about the any income which is taxable, chargeable to tax under the head salary. How will you recognize that this particular income is going to charge under which head? Suppose I have a rental income, for example. You can't charge it under the head salary. Why? Because you have to see the condition that under which head it will be taxable. So for salary, it's a section 50, which says that first of the foremost condition is that there should be an employer and employee relationship. So if there's an employer and employee relationship, then the salary will be taxable under that income will be taxable under the head salary. It can be taxable either on area accrual or due basis. If income salary is already taxable on as an advance salary, then when you are receiving the salary, then again you don't need to tax it. When salary is taxable on area of a salary is taxable, then you don't need to tax when you receive. So whichever is earlier, either you receive or accrue. Suppose I'm just taking example of March month salary. Suppose March month salary is already included in for a particular financial year on accrual basis, but you are going to receive it in April of the next year. If it is taxable in the March itself in the financial year, you don't need to include it in the next financial year when it is going to receive, because you have already taxed it in the previous year. So this is what given in section 15. Then ma'am has taught you some exemption under section 6, that there are some certain cases when the remuneration is exempt in the hands of a person who is not citizen of India. Then ma'am has very well explained the allowances. There are many allowances and there are categories also. Certain allowances are there which is taxable under both the regimes. So there are certain allowances which are exempt under the optional tax regime. There are certain allowances which are exempt under both the regimes. So these are the allowances ma'am has taught you very well. So for salary student, because salary is something which at the final level, your main thrust will be on the business income, capital gain, and other sources. So salary will not be dealt at the final level in so much detail. So at the intermediate level, it is very much important for you to understand the head salary income, because it is going to be tested at intermediate level only in detail. In the final level, because there's a 5 heads of income and salary is taxable under the head salary, so definitely it will going to impact at the final level. But the main testing of salary charge income taxable under the head salary, it is at the intermediate level. So whatever is your doubt regarding the salary, whatever your doubt related to allowances, the exemption, what is the difference between ma'am allowances and perquisite, because in the next upcoming sessions you are going to understand the perquisite also. You can have a doubt ki ma'am what is the difference between allowances and perquisite, because you have understood now HRA, house rent allowances. Then in the forthcoming sessions, there will be perquisite for rent-free accommodation. Then you might get confused and what is the difference between both of them. When it is a perquisite, when it is an allowances. So whatever the doubt you have, this is the class where you can raise your doubt and you can clear your doubts. So just take more and more advantage of this class. Just clear your concept, practice after the session, and ask whatever the doubt which are related to the topic which already covered in the previous session. Just clear your doubts in the starting 5 to 10 minutes and we can just go further for the next topics. So for the today's session, if whatever ma'am has told you, if anyone has any doubt regarding anything, okay, we have got a, yes, Rajita had said that that's all clear, very good. So ma'am has given, I guess, some if ma'am has given some question to you for your practice, for your as a homework, then please do that questions. And if you have any face any difficulty, then you can ask your query to ma'am in the next sessions. And student, please fill the feedback form also after the session. It is very much important that you fill your feedback form, so that if there is anything which we can improve upon on, we will take into consideration that part. So please just fill the feedback forms for all the classes.
Yeah, thank you, ma'am. Just like to add one point that there were 3 questions given in your homework. in the PPT that has been uploaded on the portal. Third one you may not be able to do now because we have not covered it yet in the class. So please do first and second one. And in the next class, we will discuss the solutions.
Okay. Just want to add one thing. Rachita has said regarding the MCQ question. Yeah, definitely MCQ question will be taken up. And for your practice also, students, first thing is regarding the case scenario booklet. There is already on the website. There is a case scenario booklet where you can practice the questions, but definitely because salary is not completed and it's an integrated case scenario is something which is integrated of many provisions. So you can't attempt this case scenario based MCQ right now. But regarding the MCQ on the BOS knowledge portal, when you log into that, there is a MCQ practice portal. So where MCQs are uploaded, for that you can practice the MCQ from there. Okay, students, for I guess this is it for the today's session. We will meet you in the next session, which will be day after tomorrow on Thursday at the same time, 6 p.m. Good night, students.
Okay. Thank you so much. Thank you.
Thank you, Shreya.
Thank you.